Here.
All right. Minnesota. This is Christy Thompson with Christy Legal, divorce and child custody paralegal and mediator. And today we are going to talk about divorce and finances. And of course, I'll be talking about divorce. And then my guest, financial planner and financial advisor, Connor Thielfoldt, will talk about finances. Don't ask me about that. But a couple of points about divorce, and then we'll move actually right into the financial stuff because, you know, you guys can hear me talk all the time. So, divorcing, we are going to first divide the assets. First, we need to value the assets. And that's actually where someone like Connor would come in value come in handy, is because we need to have your financial accounts valued, your retirement funds, your investment accounts, your bank accounts, because those financial assets, those financial accounts have a divorce value based on stuff that I don't know anything about, and Connor will explain. And then we get your house valued either by a mortgage appraisal, or we do a market valuation by a real estate agent. And I have a whole bunch of real estate agents all throughout the state of Minnesota who are willing to do free market valuations for your house. And that would be a good idea if one of you is not going to refinance the mortgage within the next 3 months. If somebody's refining, then get an appraisal done because you're going to have to do it anyways. And then, valuing the other things, like your automobiles, Kelley Blue Book. If you have valuable household items, I do have someone I can refer you to who will value those items as well. And then the big enchilada, if you own a business. There's a couple different ways to value the business. I have some business valuators who can do, semi-complex evaluations for $5,000 to $15,000, and then complex valuations of businesses for $15,000 to $30,000. Or if you both agree that it's a very simple business, then I have a little formula that I use that values the business. And you guys choose what you want to do. And so then now that everything's valued, then we create a marital asset spreadsheet and we put what belongs to each person in their column. And then we move puzzle pieces around to see what makes the most sense so that each person walks away with about half of the value of the assets, the marital assets. Now, marital assets are defined as assets that are accrued or purchased or given to someone during the marriage. And now non-marital assets would include if like someone gave you a gift during the marriage. That is not a marital asset. The person who gave you that gift intended only for you to have it. Also, inheritance is a non-marital asset. And the third non-marital asset is assets that you had before the marriage. So an asset could be both marital and non-marital. So if you have like a retirement fund that has 250,000 in it, and there was 100,000 in it when you got married, then we would subtract that 100 off the 250, and 150,000 of it is a marital asset and divisible during the divorce. And so if you guys want to divide the assets, not 50-50, we can do that as well. Because if you're being reasonable, then we can be more flexible on how we divide the assets and how we divide the debts. And that's the second thing we're going to do is divide the debts. And bulletin, it doesn't matter who created this debt. It doesn't matter. You guys are married. So, one person could have $15,000 of credit card debt and the other person could have $1,000. And that is $16,000 of credit card debt. And how debt is divided is according to ability to pay And how that is defined is whoever earns more has the greater ability to pay more. So if someone earns half as much as the other person, then that person who earns more is going to pay twice as much of the marital debt. And that can include student loans. If student loans are accrued during the marriage, it includes everything: car loans, student loans, income tax debt, um, we already talked about car loans, everything, medical debt. Now, the only things that would not count are if you owe child support. That's a whole nother topic. So then we've divided the assets and we've divided the debts, and then you guys might share children. And there's a lot with sharing the children. But the best interests of the children, it is what is most important. And we will really dig into that as far as work schedules, who has been taking care of the kids to begin with, um, who has the time to take care of the kids more. Should it be 50-50? As long as there are two capable, available parents, um, that would be a good place to start, is 50-50 parenting time. And then from there, we would move on to, is there going to be child support and how much? In some situations, we do also talk about spousal maintenance. And it's very rare that people receive spousal maintenance anymore, because you get it if you're not working at all, or if you're working, part-time, and it's usually not infinite, until you pass. It is usually limited. Lots of rules around that. Schedule a consultation for more information. And so now let's talk about finances deeply. And I'm going to have Connor take over from here. And, Connor, first start talking about, I was saying, like, we're going to divide these assets. We're going to value
Yeah.
these assets. So talk about that. How do you
Yeah.
help people decide what they're going to do in
Right.
their
Yeah. This is a pretty big planning moment in people's lives, right? This is akin to being married, having a kid, new job, retirement. A divorce situation is one of those big planning moments where a lot of things need to be considered. And I'm going to try not to get too nerdy and try not to be overwhelming, because it can be. Not to mention the other emotions going on in the situation. All the kind of checkbox of things to look at or think about can be overwhelming, which is hopefully where you can provide or get help from somebody that can help you through it, like yourself, or maybe even like someone like me that's a retirement planner. As you mentioned, valuing assets and things like that. That is something that's an ongoing planning conversation, maybe even ahead of, hopefully, a divorce happening. So things like you mentioned, an inheritance. A lot of times when one spouse inherits some money from a parent or something, there might be a conversation around, hey, do we want to take those assets and commingle them with your spouse or not, and potentially open that up to being a marital asset, not because we think a divorce is imminent or anything, but because you just never know what's going to happen. I've seen situations where those have been commingled, and some other things happen down the road, and now all of a sudden that person is kind of feeling betrayed because the inheritance they had was they just chose to commingle it, for example. So some of those conversations, valuing also as it relates to, for example, keeping the house versus a 401k or something. So an example I see is, spouse one kind of worked outside the home, saved up money in a 401k, which obviously was going to be joint retirement resources. Spouse two maybe didn't, and now they're talking about, hey, well, I'll keep the house and you keep the 401k, or some split of the two. Things to consider are that 401k potentially isn't the dollar value you see, because there's going to be taxes taken out of that. The house is also not necessarily the value you see, right? You got to be thinking about, if you're going to sell it, what could we sell it for minus what do we owe? How does that compare to that 401k? The other thing that's a little bit more nuanced, try not to get too nerdy, is the spouse that's going to keep the 401k expected to have higher income or significantly higher income, because that 401k, is worth less because they're going to pay higher taxes when they take the money out. versus maybe the other spouse who isn't, it maybe is going to go work, but is going to work earn less, right? Especially you get into tax brackets and things, and now in a single tax bracket, that difference can be significant. It can be to the tune of tens of thousands, depending on the situation. So even considering, and this is where, again, it starts to feel overwhelming, what is that 401k or that IRA or that investment account worth? Well, it could be different to the two of you, especially if it's not going to be accessed immediately. So those are some of the things I think about as it relates to kind of the ongoing during or right before a divorce proceeding, as you're kind of working through probably with yourself or otherwise. What are we splitting here?
And do you want to talk a little bit about quadros or not needing
Mm.
a quadro?
Yeah. So quadro, QDRO is a term that's thrown around a lot during a divorce proceeding, and it's a qualified domestic relations order. Basically, it's kind of the law or the ruling or the decree from the court that says, "Hey, split up the assets this way." Something that comes in conjunction with the quadro is something generally called like a transfer incident to divorce. So something that could be confusing is if for example, if you or your spouse, former spouse, had again, like I said, a 401k or an account at work that's going to get split up, and then also had some investment accounts over here, the quadro won't necessarily apply to the investment accounts, even though it kind of feels like they sort of do. For all intents and purposes, it's a very similar situation. And sometimes that's something an attorney or Christy Lee is going to be able to help you with. Sometimes that's something where a planner might come in, because now you're going to take that order, you're going to go to the custodian or the bank that holds the investments, whether the 401k or the investment accounts. You're going to give them that quadro or that decree from the court saying split the accounts this way, or the agreement pursuant to the proceeding with Christy Lee. And you just need to kind of speak the language a little bit, because no matter how good they are, sometimes they, we us finance people can have a tendency to talk over people's heads sometimes. So that's where it might be helpful to have someone like myself or another planner help you with kind of the technical piece of splitting up investment accounts, if that's something that you need to work on. And so yeah, there's just that distinction. Quadros are generally for work plans, and then a transfer incident to divorce or a separate kind of part of the decree would be for IRAs, Roth IRAs, investment accounts, maybe even bank accounts.
Awesome. All right. And I am not seeing any questions for either of us so far. Um,
Okay.
why don't you tell us how you help people replan their financial future
Yeah.
after a
Mm-hmm.
divorce?
Yep, absolutely. So this is the part where I have to take a step back, be a little bit bigger picture than divorce specifically, but it all kind of applies again, right? So financial planning, in my opinion, is much more robust than just, hey, here's an investment account, let me manage your money or your investments. To me, financial planning is about, if I'm really narrowing it down, helping you achieve your financial goals. So whether that's pursuant to a new life that is single and divorced, or whether that's married, though, that's things like, hey, how do we handle the cash flow of our household? How do we help pay for the kids' school? Maybe how do we retire at this age with this lifestyle? How do we take the family trip, buy the car, whatever that is? So the same things sort of have to be reevaluated when a divorce happens, because you're now in a situation where your financial life obviously has changed, just like the rest of your life has. And so are those goals the same? Potentially not. If he or she was the one that wanted to move to Florida and play golf all of retirement, maybe you never even cared about that. Or maybe if you still want to do that, you're going to do that in a different world, right? Maybe you don't need multiple bedroom. I don't, it depends. It's very, very specific and personal. This is why I say personal finance is supposed to be personal, and why I actually kind of battle rules of thumb personally again, because everybody's situation, what they want in life, what they need in life is different. So things like, what does retirement look like, could be different. When could I retire and live that life might be different. The specifics of, like, can I take social security benefits of my ex-spouse, which you can, depending on circumstances. How long were you married? How old are you? What is your own social security benefit? Those are all things that come into play. Things like maybe if your spouse had a pension that they're going to get, what are the rules around that? Benefits, things like that. So your financial future definitely changes. You might have been thinking, hey, I'm going to retire at 60, and then we'll sell the house, and like I said, we'll move to Florida. Well, now you might be looking at retiring at 63 or 64, or maybe you're retiring now. Who knows? It just depends on your circumstance. So it's not just retirement, but it's also how do we pay for the kids' school? Now that we're two households, how are we going to handle that? All that kind of stuff. So it's the short, intermediate, and then long-term goals that need to just be reevaluated based on your new situation. What do you want? And then how do we get there?
Ooh, and that's a lot. Um,
Yes.
can you give us a tiny, like, little bit of information about Social Security and how it applies to Excel?
Yeah. Yep. A
Because
little
that's
bit.
something,
So
like, I've had a few clients who had in their divorce documents that that they'd be able to receive um a benefit based on the spouse and this and that and the other thing. So if you could explain that.
yeah. So at the risk of getting technical, I'll do my best. So generally speaking, if you were married for over 10 years, you're not remarried, and you're over a certain age, you can draw from your ex-spouse's Social Security. They can't stop you. They don't even necessarily know. The Social Security Administration would basically go through the process, and it depends. So for example, Social Security, again, broadly, and try not to be technical, is based off your earnings history. So if you made X amount of money and you paid X amount of Social Security and FICA payroll taxes, they estimate your Social Security benefit is going to be X. And if the portion of your ex spouse's benefit, Y, is more than X, you can apply again after a certain age, and you can actually get their benefit instead of your own. If yours is higher, whether that's prior to your divorce or after your divorce, if it's higher, you'll just get your own. So this is where it can get a lot of different scenarios can happen, right? But that's kind of broad strokes how that works, and it is something that you should explore again as part of the planning process, especially the retirement planning process. When you can retire, how much you can spend in retirement, those are all affected by which Social Security benefit are you taking, when are you taking it, stuff like that.
Yeah, and something to think about for people is if they're not going to have a large Social Security benefit, um, and they're divorcing when they're elderly, is maybe that's when they need spousal maintenance.
Mm.
And
Hmm.
so then we could talk about spousal maintenance. But they could also be receiving enough income from the assets they receive uh,
Hmm.
from the retirement funds, investment accounts. And then they might not need spousal maintenance because they're going to be able to draw X number of dollars,
Exactly. Yep.
per month from those financial accounts. And so that's why it's super important that they talk to me about the legal stuff and you about the financial stuff.
Right.
Create that financial plan before they just, decide yep, this is how we're divorcing. And
Yeah.
yeah, don't please don't do it on your own.
Right.
Uh,
Right.
get advice on, what qualifies, for if you would qualify for spousal maintenance, number one. And then, how long, number two, and what the likely amount, could be.
Yeah.
And you guys would have to agree upon that. And just know that spousal maintenance is the Wild West. There is no, like, if for child support, there's a calculator. You can just Google Minnesota child support calculator. There it is. There is no calculator for spousal maintenance. It is totally based on judicial discretion and a few
Mm.
basic principles. Um, so lawyering up and battling out is not going to mean you're going to get spousal maintenance. So get financial advice to figure out if you can, survive without spousal maintenance. Get some legal information to figure out if you might be likely to get spousal maintenance. Um, if you do really in fact need it, and you're elderly, um, and you guys have been married for quite a long time. Yeah, lots to think about. And
Yeah.
let me check if we have any questions. Okay, still no questions. Um, two people watching, but no questions.
Okay. I've got one other kind of word of warning, I guess. Just
Great.
a just a bad situation I've seen, or it could have been a bad situation, and I think it's probably more common than people think. So, let's call it new client A was married to former spouse B, right? And we'll call him Tommy, I guess. So Tommy came in and became a client and got divorced from Sally, 12 years ago. Couple of kids. That's fine. That's all been in the past. He's actually since remarried, which is why he's now engaging with a financial planner. Hey, time to kind of get my financial life in order. He had updated his will post divorce to do away with Sally as part of it, but he had not updated his 401k beneficiary. So, for those that don't know, you can add a here's who I want to inherit my money out of my 401k directly on the account. It's called a beneficiary designation. It's the same thing with basically the same thing with your house transfer on death, bank accounts transfer on death, investment accounts, things like that. The problem is, or the problem that he didn't know he had, and the risk he had was just because he has a will, which Sally's not in, that actually doesn't kick into effect until the by statute or the by contract the beneficiary designation happens first. So it never touches the will. So if he would have passed away having been divorced from Sally for the last whatever it was 12 years, she would have got that entire 401k, his ex-spouse, and there's not really anything you can do about it. So the word of warning is make sure you update post divorce, right? Your beneficiary designations on investment accounts, transfer on death on your house, and also like life insurance proceeds, right? If you have a life insurance policy and your spouse, former spouse, was a beneficiary of that, you're going to want to go in and update that. And certainly if you're remarried, but even post just divorce, even if you're still single and things, just something else to keep in mind, because that can really surprise people if they aren't kind of looking at it holistically.
Yeah, and then I was listening, but I can't remember if you said that as soon as you file for a litigative divorce, or as soon as you divorce my way amicably and the judge signs the documents, um, any will or trust that you had in place just goes away, because the law just assumes you do not want
Mm,
your ex-spouse or soon to be ex-spouse to be your beneficiary or to be in your will or trust anymore. So you have to rewrite the trust, or um, all of your stuff is going to end up in probate. And that's a lot of money. And so you are going to, you know, even if you think your ex-spouse is an amazing person and is going to use that money to do amazing things for your children, you're still going to need to meet with an estate law attorney who one of us
mm.
will refer you to, um, because yeah, the old will just becomes invalid if
Yeah.
you do
And
certain things.
And again, even a new will is not going to drive what happens post death if those beneficiary designations are still there, which most people don't know in or outside of divorce. A lot of people are surprised by that, but the beneficiary designation, though, because I've had people even outside of a divorce situation say, "Well, we updated our will, we're good." I'm like, "Hey, it doesn't apply to your 401k because there's a beneficiary designation. That's going to drive what happens with it." So, all things to keep in mind. Again, this isn't meant to be overwhelming. It's just this is a pretty comprehensive situation, and that's why it's good to just go through things kind of bit by bit, make sure you didn't miss anything.
Absolutely. And you know what? You might not even need a will or a trust,
Mm-hmm.
because if you have a
Mm-hmm.
beneficiary for all your financial accounts and you have a transfer on deed death on your house, you might
Yep.
not even need.
Exactly. Yep.
So
Absolutely.
that's why you need legal advice from the state law attorney
Mm-hmm.
as
Mm-hmm.
part of your divorce process. Thanks for joining me, Connor, and don't have any questions. And
Okay.
so everybody, we are going to have our contact information in the post very shortly. And please reach out to either of us for a free or no cost consultation. We would love to answer your questions and give you some information about what we do. And yeah, and I hope that everyone in Minnesota has a great rest of this more pleasant than it has been, but it's kind of cloudy out there. That's not great. Summer day.
Mm-hmm. Thanks, everybody.